most people shouldn't buy a home?
No one should buy a home.
Interesting.
Homes were not built for people. Homes were built for banks. The bank created that product to sell money. You can't just loan people money. You need a product in between. The bank can't lend money for just money. Like, you need a reason to borrow money. Oh, you're starting a business. That's a reason, but it's really risky for the bank. Everybody should have a home, right? Oh man, that's pretty good. We should call it something like the American dream. You can't just call it a house, right? Everyone should have one, right? They got the politicians behind it. Yes, everyone should have one. And then what they did was basically those homes were built for banks, because who made all the money on the homes? Wasn't even the builder. Certainly wasn't the homeowner. It was always the banks.
That is the truest shit that I've ever heard. And one of the biggest misconceptions people have around buying an own or occupy a home is that it's not $600,000 or $800,000 that you pay for the home. It's $1.6 million you pay for the home, because over a 30-year period, you're going to pay about double what you bought the home for in interest. But then the sweetener to that is, it's not actually 1.6 million bucks, because every dollar of interest and expense you pay on an owner occupier property is paid for with post-tax income. Meaning that if you are on the highest tax bracket in Australia, you're paying 45 cents in the dollar plus Medicare. So let's just say very close to 50 cents in the dollar, which means if you need to go pay $1.6 million in interest on an $800,000 property that you buy over a 30-year period, you need to earn $3.2 million in income, earned income over that 30-year period, to give 50% of it to the government, then give the other 50% to the bank for interest on your property, and you've got $0 left to live. That is why owning an owner-occupier property outside of the capital gains tax exemption that you get on the growth is the most inefficient way to grow your wealth. Because the biggest expenses you will have as an individual in your life is tax. That is the biggest expense. It is somewhere between 30 and 50% of every dollar you earn goes to tax. So if that is the biggest expense, that is the thing you want to be most efficient with. And to be most efficient with tax, you need to be making sure that nearly everything that you pay for with your income ideally is pre-tax, meaning you get a deduction on it. And that's why rent vesting and putting all of your earned income into investments, so you then get a deduction on it, which essentially then means you get a 20 or a 30% pay increase because you're getting the tax credit back, is the most efficient way to build wealth. And if anyone thinks, well, the capital gains tax, you're going to pay capital gains tax, if you own any investment for longer than 12 months in Australia, you get a 50% CGT discount. 50%. So if you get a 50% CGT discount, plus you can claim back whatever your taxable rate is on any expense that you pay for that property, that is the most efficient way to build long-term wealth in Australia.